Hi guys, you're welcome to another video on how to trade XAUUSD, that's gold. And on my screen I have gold on the 30 minutes time frame. The screen is divided into three, right? Screen is divided into three. We have the main chart. This is the main chart. We have the indicator window 1. This is indicator window 1. We have indicator window 2, and then we have indicator window 3. It's divided into 4 rather. So we have some indicators on each window. All right. For instance, at this point, this where for the main chart, you see price, breaking above all indicators. I'm talking about the Ichimoku and the moving averages. Price is developing above all indicators, and that's the point where you get to buy, where you see price forming higher highs above the fractal point. That's when you get to buy or place your buy order. For instance, you place your buy order around this point. Place your buy order around this point. You have to place your buy order around that point. And the stop loss will be below, your stop loss will be below the Ichimoku. And when you are buying and you place your buy entry at the green point, when you place your buy entry at that green point, your stop loss is expected to be somewhere below the Ichimoku. That should be your stop loss area. So on the screen, you see price going up. And then as it goes up, you move the stop loss along into the profit area. Now let's look at a situation where you get to sell when price develops below the Ichimoku and the moving averages. An example is around that point. That's a point, that's another point, but you have the black line below that point. That's a good place to place a sell trade. So if you place a sell trade around here, place a sell trade around here for you to scalp sell. Your stop loss will be above the Ichimoku. around that particular point where you have the orange shape. Your stop loss will be, it's preferred to be placed around that point or above the Ichimoku. Then price is expected to go down. As price goes down, you move your stop loss to trail profit. That's the stop loss area. In case you want to place your trade below all lines, including the black lines, your stop loss will still be above the Ichimoku cloud at the point of placing your sell trade. Another example of where to place your stop loss is that point. And if your stop loss is at that point, the trade entry will be at that particular point. The trade entry will be at that particular point where we have the green shape. And as you can see, price goes up, and as price goes up, you trail with stop loss. So measuring the distance between the stop loss and the price entry. As price goes up, it's preferable that you move stop loss in line with the distance. As price goes up, you move the stop loss uh, in line with the distance of price movement, especially when you are in profit. This is another example of how to sell uh, XAUUSD using this strategy. That's a good point to place a sell trade when price is below all the indicators except for the black uh, indicator or the black line. That's a good point to place your sell trade, and that's at that this particular point is where you can place your stop loss. In a sell or short situation, stop loss will be above the cloud. In a long or buying situation, stop loss will be below the cloud. So we are shorting XAUUSD, shorting gold. So stop loss will be above the cloud. So when shorting gold, uh, if price drops below all indicators except for the black line, you can place your sell trade. But price will have moved to an extent before it eventually crosses down below the black line, and you can still place a sell trade at that point. At the current situation, see price dropping below all the lines at that point that I've just put the green shape, and our stop loss will be above the clouds. So when market opens, price is expected to drop further, and as price drops, stop loss will be moved in accordance to the distance between the stop loss and the trade entry. So looking at the indicators for the main chart, we have fractals, we have moving average 21 period, exponential color is blue. We have another moving average 200 period, exponential color is black. We have Ichimoku 10 can cents, 9 kilo cents, 26 second span B is 52. Up Kumo is green, down Kumo is orange. Then we have 50 period exponential moving average, color is purple. So looking at indicator 1 rather, place a buy trade when the red line moves above all other lines. More like you have a bullish trend developing as soon as the red line moves above all of the lines. And for bearish trend, as soon as the red line crosses below all of the lines, you have bearish trend development. So in a bullish trend development, you look for buy opportunities like around here. And the bearish trend development, like around here, you look for sell or short trades opportunities. So indicator with the one strategy is quite simple. As you have a crossover to the upside, you buy or you look for buying opportunities, and as you have crossover to the downside, you look for selling opportunities. So you have crossover to the upside, look for buying opportunities. And as you have crossover to the downside, you look for selling opportunities. So in most cases, the crossover will have happened on indicator window 1 before it happens on indicator on the main chart. So just look for the alignment of signals on indicator window 1 with that of the main chart and you are fine. The indicators we have MACD 12, 26, 9, apply to close, no call up. Then we have moving average 250 period, linear weight, first indicators data, blue color. We have another moving average 200 period, linear weight, apply to first indicators data, black color. We also have a 1 period, method is linear weight, apply to first indicators data, color is red. The 1 average. Look at the window 2. When you have the changing colors, you your buy or sell trade. For instance, at this point, the cloud color to green, and then you have the orange crossing above cloud. You look for opportunities. Cloud change at that point. Uh, you look for sell opportunities. The cloud change to green at that point, and the orange line crosses above the cloud. You look for buy opportunities around that particular point. At the current market close, the cloud changed to red, and the orange line is below the cloud. You look for sell opportunities. Let's look at the parameters for indicator window 2. We have relative strength index, 14 period, apply to close, no color. Then we have Ichimoku, Tenkan Sen 5, Kijun Sen 2, second span B 52. Color is checked, color fill is checked. Kijun Sen is orange, up Kumo is green, down Kumo is red. Of course, when the color changes to green, you buy. When it changes to red, you sell. Now for the last indicator window, average true range, period is 14. Average true range is used for measurement of where to exactly place the stop loss. The current market price average true range is 8.479. No, it's 3.479 rather. The point of placing loss just allowed you add 3.79 to 1980.57, and that would be 1984 about. So that's the point where you place loss. In this particular example, stop loss are below the cloud, but the average true range is 3.894. So, and the stop loss is 1960.4. Subtract 1960.37 minus 3.4. That should give us 1957 or 56 region. So you move your stop loss to that particular point. So that's the essence of the average true range. The average true range point at the particular time of trading, of placing your trade, is added or subtracted from the stop loss level. If the stop loss is at the top of the cloud, you add the average true range. If the stop loss is below the cloud, you subtract the average true range level. Like it's 4.601 at the point of trade of placing trade here, and the cloud is around the top of the cloud is around 1996. Add that to 4.67. Adding 1995 to 4.67, that should give you 1999 or thereabouts. So the essence of the average true range is for you to add the value at the point of placing your trade to the stop loss level when you are selling, or subtract the value from the stop loss level where you are buying for you to know the actual stop loss point. The reason for this is because without adequate stop loss, your trade can get, you know, closed out in loss if the stop loss uh, is too tight. So you can use average true range to know your exact stop loss points. That's that for the video. Till I come your way next time, ensure to subscribe, click the like button, drop comment below the video, and you may visit our website www.binfxtrader.com, and also another website of ours, fxfables.com, to learn more on how to trade. Till I come your way next time, it's bye for now.